Let's turn to tech dominance today and Mag 7 performance. Our next guest is interested in a lineup change. Let's bring in Steve Sosnick, Interactive Brokers Chief Strategist. Steve, welcome. Good to have you in.
Great to see you in person, Carl.
What would a line change be? What are you looking for?
In January, I proposed that the Mag 7 really change its roster, and that was to add Broadcom and ditch Tesla. And I think I feel vindicated by that recently. And the reason for that at the time was not just that Tesla was underperforming. It was that Broadcom captures the whole zeitgeist of the moment right now. It's an AI stock, much more so, even though Tesla may be one more in the future. Broadcom is one in the present.
Does it say something, that idea, does it say something more about Broadcom than Tesla?
Yes, it does. It's more just about, Broadcom is part of this whole movement. And what we're seeing now is this great combination of MOMO and FOMO driving the market higher. And Broadcom is part of it. Tesla is not right now.
To me, part of the premise of some group like the Magnificent Seven or the old FANG getting anointed is that these are the companies that have a long-term, enduring advantage, and you don't have to overthink it beyond that. If we're going to be shuffling the members all the time, like, what's the point in a way?
Well, I mean, it's a fictional character anyway, right? I mean, so, right. We could do whatever we want with it. And I just felt that would represent, and it does represent us better right now in terms of what's going on.
But is it also worrisome that the breadth is so poor and that the concentration is so high?
Extraordinarily so, yes, because I think what we've had here is essentially a pair of binary outcomes. Either we're going to keep getting driven higher by tech and momentum, or this fails, and because we're so stretched right now, there's not a lot of room. It becomes sort of like everybody trying to crowd out of a fire exit or something like that, and that really is the problem. That's why I look at this as, if you want to follow the momentum, go ahead. But this is where, when volatility is low, when options are cheap, this is maybe where you want to be looking at insurance.
I do wonder about the dynamics of that, in the sense of if people want to complain about the fact that the index maybe isn't reflective of the typical stock. So let's say the big ones that have been driving the upside do get tired, do break stride, do correct hard. Does that mean that Target and Bank of America and all the stocks that haven't been participating are going to go down more? Because the median stocks underperform the S&P quarter to date by like 8 or 9 percentage points already.
It depends how the exit, if it occurs, happens. Because remember, anytime you buy, let's say, Spiders, which is the generic basic ETF, you're putting 25 to 30% of your money in tech, whether you want to or not. And so if you get a bit of a rout in the tech sector, my fear is that people get out of SPY, they get out of Qs, and that drags the other stuff down, creating probably better value in the value stocks. But in the short term, that could get nasty if it occurs.
I had a question about sort of behavioral economics. We mentioned this Barron's piece over the weekend looking at Gen Z, which is who they've grown up either in a pandemic or being told the planet's going to end because of climate, and as a result, their risk tolerance and their FOMO is extraordinarily high. Do you see that as sort of cornered into a certain element of the market that's not material to the broader market, or not?
Yes and no. I think most of as the parent of Gen Z people, I would say that they do have, at least my kids have an understanding of what's kind of real and what's kind of fake. The one thing I will say is when you're very young, you can take more risk. You can chase GameStop. You can chase these other situations. I don't think that's like part of a healthy, balanced diet, so to speak. But you know what? This is the age where you can eat junk food and get away with it. So they give it a try. But I'd like to think they come back to what I would consider more established type of investment themes.
Well, kind of related question at Interactive Brokers. What do you see in terms of retail sentiment right now?
Our customers love volume and volatility. That's basically where we see the action. But
we're not seeing either.
But we see it in individual names. So, NVIDIA, GameStop, AMD, Tesla. These are like the perennial leaders. Well, GameStop is more of a recent one. But every so often you will find on our top 25 most active list some name that I have to look up because it went up, tenfold in 2 days, and everybody jumped in and started trading around it. So our customers are very trading oriented.
Are they losing money on those meme trades? Are they doing well?
I think it's kind of, I don't have any insight into whether they're making or losing money. The fact that they're still here means that
it's kind of zero sum on some level.
I think it's probably zero sum to some
level. To Carl's point about Gen Z, I think one of the arguments is that if you feel like housing is chronically unaffordable, and I feel like I'm never going to be able to have that kind of orderly accrual of wealth, lottery psychology might as well take over. And, I can either sort of look for the long shot and bet it, and I'm okay if I lose, or, I can maybe hit the score and I'll be one of the lucky. Crypto, too, is kind of fed into that.
Crypto is entirely part and parcel of that. And I will say one of my Gen Zers is basically does social media for a range of crypto companies.
Oh, yeah.
And my comment is, what do your customers get out of it? But he's doing rather well doing this because that's what they respond to.
Attention is the product.
Exactly.
Before we let you go, Steve, really quick, are you seeing election-driven hesitance creep in?
Not yet, although we do see it reflective in the VIX futures curve, where you see a bump in October, bearing in mind that VIX is always looking ahead 30 days, so mid-October VIX is looking at the election. We do see that bump. It's not there yet, but I do think that bump is going to get more pronounced as we get closer to the election, because I think the range of potential economic outcomes stemming from the election is quite wide.